Before banks, the safest place for your life savings was a hole in the ground you dug yourself and told absolutely no one about. If you died before telling anyone where it was, it simply vanished. Not stolen, not spent, just gone, sitting a few feet under someone's floor forever. For most of human history, there was no vault, no account number, no piece of paper that promised your money existed somewhere safe. Wealth was a physical object. If you couldn't hold it, wear it, or lock it in a chest, you didn't really have it. Long before coins, wealth looked like cattle, grain, and salt. A rich man wasn't someone with numbers in a ledger. He was someone with fat livestock and full storehouses. Your entire net worth could get sick or wander off or rot. Grain was one of the earliest forms of saving. Farmers stored surplus harvest in pits and clay jars to survive lean years and famine. But grain had enemies of its own: rats, damp, mold, and thieves who knew exactly where a family kept its future. When precious metal coins appeared, they solved one problem and created another. Coins were compact and didn't spoil like grain, but now you had something small enough to steal in seconds. There was still nowhere official to put it, so people buried it. Archaeologists have unearthed thousands of coin hoards across Europe and Asia, caches buried during wars, raids, or plagues, and never reclaimed. Every hoard is a small tragedy, someone who meant to come back and never did. The first real solution came from an unexpected place: temples. In ancient Mesopotamia and Egypt, temples were considered sacred ground, protected by both law and superstition. People began leaving grain and silver with priests, betting that even bandits and kings would think twice before robbing a god's house. This wasn't casual trust. The Code of Hammurabi, nearly 4,000 years old, actually laid out rules for deposits held by temples and palaces. What happened if goods were lost? What happened if they were stolen? It was, in a real sense, the first banking law ever written down. In Rome, wealthy citizens stored money in the Temple of Saturn, guarded space beneath the state treasury. It worked well enough for centuries, but temples could still burn. Empires could still fall. Armies could still march in and take everything the moment the guards looked away. And when that happened, there was no recovery, no claims process, no one to call. A sacked city didn't just lose its buildings. It lost every family's entire saved fortune in a single afternoon. Wealth back then was only ever as safe as the walls around it. Through the Middle Ages, people got creative. Stone manor houses had hidden compartments behind fireplaces. Floorboards concealed strong boxes. Wealthy families built secret rooms accessible only through disguised panels, because the only real security was making your money invisible. But hiding your money created a brutal paradox. The safer the hiding spot, the more likely nobody else could find it, including you, if you got sick or forgot or died suddenly on a road far from home. Secrecy protected wealth from thieves and erased it from heirs at the exact same time. So people leaned on kinship instead. You gave your savings to a trusted brother, a cousin, a village elder, someone bound to you by blood or reputation. There was no contract, no court that would enforce it. If that person betrayed you, your savings were simply theirs now. Then, in medieval London, an odd solution emerged from an ordinary trade. Goldsmiths already owned heavy iron vaults to protect their own raw gold and jewelry. Wealthy merchants realized those vaults were safer than anything in their own homes and started paying goldsmiths to store their coins too. The goldsmith would write a receipt promising to return the coin on demand. And here's the strange turn. People started trading those receipts instead of the actual gold. A piece of paper that simply promised money became easier to carry than money itself. That receipt was the ancestor of the modern banknote. Around the same time, Italian merchant families like the Medici were solving a different piece of the puzzle across cities. Instead of carrying gold along dangerous trade roads, merchants used letters of credit, a promise honored by a partner bank in another country entirely. In England, for over 600 years, the crown used something even stranger: tally sticks. A wooden stick was notched to record a debt, then split lengthwise, one half for the crown, one for the creditor. The two halves had to match perfectly to prove the debt was real. For centuries, this splintered wood was quite literally money. Ordinary people without merchant connections turned to pawnbrokers. You'd hand over a ring, a tool, or a family heirloom in exchange for coin with the right to buy it back later. It functioned as a kind of savings in reverse. But if the pawn shop burned or was robbed, your only safety net went up with it. In many parts of the world, communities solved this differently, through rotating savings groups. In West Africa, these were called susu. In Latin America, tandas. In South Asia, chit funds. A group of neighbors each contributed a fixed sum regularly, and one member took the full pot each round. No vault, no paperwork, just mutual obligation everyone understood would be honored. Being wealthy in this world meant something closer to being a guard than an investor. Rich households kept dogs, hired watchmen, slept with weapons near the bed. Money didn't grow quietly somewhere while you lived your life. It sat, and it needed defending every single night. There was no such thing as insurance for any of it. If your house burned down, your savings burned with it. If a ship carrying your invested silver was taken by pirates or sunk in a storm, that money simply ceased to exist. There was no claim to file, no fund to reimburse you. Loss was permanent and total, and death remained the cruelest risk of all. A man could spend 40 years quietly accumulating coin, bury it beneath a familiar oak tree or a hearthstone, and die of a sudden fever before he ever said a word to his children. Historians believe countless hoards found today were exactly this: a lifetime of saving lost to silence. It's worth sitting with how different that world was. Saving money wasn't paperwork. It was a physical, lonely, ongoing act of defense against fire, war, theft, rot, and your own mortality, with absolutely no institution standing behind you if you failed. Modern banks didn't just invent a place to put money. They invented an idea that had never existed before, that your wealth could be safe without your body physically guarding it, without your memory being the only map to where it lived. Deposit insurance, audited ledgers, digital records backed up in multiple locations. None of that is ancient. Most of it is less than a century old. For nearly all of human history, the version of safety you take for granted today simply did not exist for anyone at any wealth level anywhere on earth. Tonight, your savings will sit as a number on a screen while you sleep soundly, unguarded, undefended, unburied. No oak tree, no hidden panel, no watchman standing outside your door. Just a quiet, collective promise from strangers you will never meet that the number will still be there tomorrow. That promise feels invisible precisely because it works. But it took thousands of years of buried coins, burned temples, betrayed kin, and lost fortunes to build something you never have to think about. Your money has never been safer, and you have never had to trust so many people you'll never meet to make that true.